The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 5th wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, folks, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool that I call only one thing is more important than learning from experience. Guess what that is? Not learning from experience. You got it. Only one thing more important than learning from experience, and that is not learning from experience. Now today, folks, today will be filled with opportunities. Filled with opportunities for you to express yourself, expand yourself, and experience the world around you. A lot of people, they actually talk about life. They talk about living. Some love it, and some leave it out there. What you and I know is that life can be whatever it is that we want to make it out to be. You and I know that we are able to learn from our past experiences. When we've been there, when we've done that, what does that mean, folks? What does that mean? That means just simply what you want to do is you want to use that experience because it is an excellent teacher out there. Always learn from your experiences. You've heard the saying, it's not whether you win or lose, it's how you play the game, right? No. Actually, winning and losing does matter out there. And oftentimes what you'll find is people won't play the game of life because of the fear of losing, that false evidence appearing real. It's really all about fear. After all, losing could make you what? Could make you feel like a real loser out there. But the real loss, folks, is not in losing. The real loss is not in playing the game and learning from your experiences out there. Mao Zedong once said, if you want to know the taste of a pear, you must change the pear by eating it. I want you to eat up all that life around you. If you don't know the theory and methods of revolution, you must take part in the revolution, folks. All genuine knowledge originates from your experiences. We can learn from experiences, and we can learn from not learning as well. But don't let the game of life pass you by. Our destiny, folks, it is not predetermined for us. Our destiny is determined by us each and every day. Go have a great day out there. Let's go take a look at the day in the markets here as we begin the day. We come in, the futures are up. You've got the Dow futures up about 29 points right now. ES Mini up 1.5. NASDAQ futures just turned red, slightly down a quarter. You've got the Russell 2000 up 4 points. King dollar up 17 ticks right now, trading out at 79.81. Gold up $1.30. Silver up 6 pennies right now. Light sweet crude back 35 cents. You've got, we take a tour around the world. DAXy, we're certainly going to take a look at the DAX. It's up 5 points. But that's not really the story of the DAX. As you'll see when we go take a look at the charts, the DAX gapped up this morning. And right now, trading at its session lows. The DAX gapped up, opened, well, the high so far in the DAX today, 74.8228. And that is the high for the day, even though the DAX doesn't close for another 2.5 hours out there. The FTSE's up 11 points. Over in Asia last night, you had the Nikkei up 36 points, testing its Gartley sell and also the butterfly sell opportunity out there. The Shanghai was up 3%. The Shanghai and the Hang Seng up big last night, mostly on news of China easing, or China saying that they are going to ease restrictions on investment inside their banking structure out there. And there was some huge follow-through, some huge volume. We'll see that as we take a look at the charts. Right now, we're looking at the ES Mini. If you're following along with us on TigerTV, maybe you're listening on your mobile device because you are listening in on TFNN.mobi. That is a beautiful thing. Maybe one of the radio stations that picks this up. Either way, no matter how you're listening to us, we absolutely appreciate that. You can always catch an archive of this show on Channel 9. If you were watching us on Tiger TV, if you're watching us live, you're seeing the ES Mini trade out at 1407 right now. That is making a 0.618 retracement off of the swing point low from last evening, I believe it is. Last evening at about 6:10, you had the ES Mini trade down to a low of 1402.75. It is trying to crack that 1402 level, 1402 to 1403. Let me tell you, folks, you crack 1402 with conviction. With conviction, I'm talking about a wide-ranging bar and some accelerated volume there, folks. So you want to get out of the way of being along out there, because that will set off a little bit of an avalanche out there. Of course, that's just my opinion, but that's what the charts are telling me. As we come into the open here, you can see on the 10-minute chart, what you're taking a look at is the ES Mini start to push down into those oversold levels. Not there just yet, but starting to push down into those levels. That's on a pretty intraday chart, where that's a 10-minute chart out there. If we take a look at the 30-minute charts, in the 30-minute charts, we'll take a look at two of the strong dogs out here. That has been the Russell 2000. We'll put the Russell 2000 futures contract, the 30-minute chart up on my screen first. What you will see is the Russell 2000 has been traveling. This is a 30-minute chart, so it's been traveling in a consolidation range here since last night at about 11:30. The low of that is 825. That area is being tested here right now. The high of the range really coming in at about 7:30 this morning, 8 o'clock this morning, as it gets up to the 827.50. So if you took 827.50 minus 825, I guess that's just 2.5 points. The next move, either to the top or to the bottom, is going to be a 2.5 point move. That's just simply measuring the top and the bottom of that consolidation range. You can also see that the Russell 2000 on the 30-minute contract really coming up against an area of stiff, very stiff resistance out there. If you were looking for a place to go short on the Russell 2000 or on the IWM, that was a pretty good place to do it at, because it's where your back is up against the wall. Doesn't mean the trade is going to work out, but it is really up where your back is up against the wall. That's when you want to be able to enter trades out there, and really because your loss could be relatively small in the marketplace. Now, you still need to use a wide price stop. And then you can go ahead and exit out early, depending on which way the trade were to break. If we take a look at the and so you got the Russell 2000 up near its highs. The same thing in the Dow futures out here. So it's those two dogs, I won't call them dogs, but it's those two dogs in the hunt that have been really doing the same thing. You can see the sideways consolidation range inside the Dow futures. You can use the low at 5:30 this morning, out at the 12,963 level, all the way up to the high, maybe the high that came in at 11:30 last night, out at the 12,995. So 12,995. To 12, we'll call it 12,965, so about a 30-point move. So a 30-point move is going to be either to the top or to the bottom once it breaks out of this consolidation area here. That's on the 30-minute chart. You can see on the 30-minute chart well away from either overbought or oversold. So it's got plenty of energy to move in whichever direction it chooses. Now, let's go take a look. I mentioned the DAX out there trading up right now at 74.43. So let's go take a look at the DAX. See what the DAX is doing over here in Germany. The DAX, again, yesterday, as we were on the air, we were taking a look at the mere fact that we had, two relatively long upper shadows out there as you were coming in. And by shadows, folks, I'm talking about the entire candle. A body of a candle, you've got a high and a low, you've got an open and a close. The open and the close are going to be your bodies out there. Your body's on a green candle. Your open is going to be the low of the body. The high is going to be the top of the body. Then you've got your intraday time period. We're looking at a daily chart out here, and what the intraday time period has told you, is telling us, is that the bears are in control up near the top of this resistance level. That resistance level really being anywhere in between the horizontal black line that you see on my screen or the swing point high from September 21st that was tested on lighter volume. That test took place on December 3rd, 2 trading sessions ago. Very important. So the bears, as you know, if you've been listening to this show or the Money Masters show, you know that the bears have been showing that they are in control. Well, this morning, what happens with the DAX? The DAX opens up and it opens up at the price point of 74.8059, gets up to 74.8228, so just slightly higher. And then what does it do, folks? Sells off. So who's in control out here? The wicks, the shadows were telling us that the bears were in control, even though you're near the top of the range here. And today as well, what we are seeing is that the bears are in control of the DAX. Very important pieces of information out there, because the DAX has been the strongest index. Look, if it does bust through this area, we'll see a 200-point to the upside. However, where is it going to find the fuel in order to break topside? There's only one refueling station that I know of out there. That's going to be in the currency market. So let's go over to the currency market. Let's go take a look at the fueling station. The fueling station here says, out of gas. and out of gases in the euro. What we've done here, and we'll do today during the Money Master Show, to be Basil Chapman and myself joining up again for the 10 to 11 o'clock hour. Looks like the D point in the Chapman wave, A, B, C, D, and a few other letters past that, is being formed today. You won't get a confirmation until tomorrow. However, you can see here, we have not seen bears anywhere in sight for the most part ever since the lows that were put in on November 13th. However, they have shown up for work today, and they've done it right at the resistance level. So if the euro cannot take this area out, King dollar is up 17 ticks right now. However, it'll be up much, much more than that on the retracement down. A triple top in the euro. No fuel for the markets. 877-927-6648. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. So as we were going in the break, we were taking a look at the euro, the fuel in the fire for all the markets out there. So the euro making a triple top, trading off this morning down towards its session lows here. If we do take a look now, which you can also take a look at on the daily chart out here, take a look as the euro here was coming in making each of its highs. You can see the first time getting into the September 14th, September 17th area, you had the euro really in what we'll call extreme overbought condition in utilizing the relative strength indicator as one of our tools out there. We also had a 1.618 expansion, butterfly expansion. Now, the euro, don't get me wrong, it certainly is strong out there because it really hasn't backed off more than to about the 0.382 level or just below that off of the lows. The lows I'm talking about are July 24th all the way up to the high put in on September 7th out there. However, what we are seeing is a little triple top out here. Last time, that there were highs put in was back on October 17th. Sorry about that. Thought I was losing this little cold and flu. October 17th, the high out there, 131.383. You can also see getting toward the top of that relative strength indicator out there. And, of course, what the euro did yesterday was got all the way up there as well. So you can see it's in an area where it normally has been backing off. You've got a triple top out there. As far as how deep the retracement will go, well, pretty simple. Just simply go from your swing point low on November 13th all the way up to the high. Put in here this morning, it will at least back off to the dead cat bounce. That's the 0.382 level. 1.29 looks like 472. Most likely, though, pulling back into sweet 618. That would be 128 and change out there. 128 looks like I can't totally make it out even on my screen out here. I wish I could magnify that both for you and for me. But it looks like, well, I can tell you what it is. It's the 618 is going to be somewhere right around 128, 12821, somewhere right around that level. But we'll take things one day at a time, one floor at a time. First, it has to back off into the 0.382 level. Now let's dig down just so we look at 30-minute charts on the futures contract. What we can see here is if you take a look at that leg down, this leg taking place from 3:30 this morning where it made its high, moving down into the lows put in so far. You can see even on an intraday chart here, if you want to take a look at the EKG, if we take a look at the EKG from the high to the low, you can see now it has gotten down into that oversold territory. And you know when something gets oversold, what is it going to do? It's either going to move sideways or move higher in order to work off that condition. Right now, what we're seeing is we're just simply seeing a sideways move out there in the euro. You can expect a little bit of a pop out here. Looks like the euro is going to be setting up an A to B equals CD down. It's the first one in quite some time on the 30-minute chart out there. Only one other A to B equals CD down since the lows that were put in at 10:30 or so in the morning on November the 28th out there. This could be the beginning of A to B equals CD down patterns in the euro. That, folks, will put energy into King Dollar. It will start taking away energy in the commodities. You know, if we take a look at gold moving down yesterday, not doing much today. It's up about 50 cents here right now. Yesterday moving down with some volume inside the contract. Gold wants to take on the swing point from November the 5th out there. That's got about 224,000 contracts. The low there, 1672. The high is 1686. That's really not that far of a move down. Expect gold to go down and test that area here shortly. Silver also making beginning its move. Now, I'll actually go back to gold here one of the things that you should pay attention to, you know, and if you take a look at moving averages, they're great from a momentum standpoint. From my standpoint, they're great from a momentum standpoint. They're not going to be able to help you to identify the turns in the marketplace. That's where you want to use other patterns that are out there. Could just simply be candlesticks to identify areas. And in this case here, what we're taking a look at, you're taking a look at from a moving average standpoint. I've got the 20 and the 50-day. That's more of an intermediate term type of moving average signal. We're about to get the 20-day to cross back through the 50-day out there. That is a intermediate term bearish signal out there should that occur. Right now, the 20 days at 17.2380, the 50-day at 17.21. Well, let me actually give it to you. 17.2120 is the 20-day. 17.2090 is the 50-day. You can see how close they are. Why is that important from a momentum standpoint? Well, if you go back and take a look at gold as it came off of the bottom here, didn't mean to do that, but if we take a look at gold as it, oh, I changed everything out there. I'll change this back. Sorry about that. Folks, I'll change this back. We'll take a look at the 20 and 50-day. We'll go see how these markets are going to open. Apple trading right now to the downside. Freeport-McMoRan purchasing or plans to buy Plains Exploration. Plains Exploration. They're the one popping to the upside. FCX to the downside. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 33 points. S&P's up 1. Composite down 5, small caps up about 2 points, Microsoft up a penny, Intel off 8, Google up $1.47, Cisco down 4 or up 4 cents. Apple though, got apples falling off the tree here this morning, down $11 and change and falling $12 and change. They're having a sale, a fire sale it looks like in Apple. We'll take a look at that chart here momentarily. I wanted to go back for you to the gold chart. So we're taking a look at the 20-day and 50-day exponential moving average. I should have said that. Important from a momentum standpoint. It looks like today we will get a crossover. You won't know till the end of the day. This is a daily chart out here. 1721.10 on the 20-day. 1720.80 is the price point on the 50-day. Yes, prices are below that right now. You're just waiting for those two lines to cross over. Why is that important? Well, as I was really trying to say, as gold came off of the bottom, you go back to August 3rd, that's where you saw that was not the bottom. You know, you would have had to use some candle signals, such as a bullish engulfing candle, which you had on May 17th out there as gold was testing its lows. If I pull this back a little bit further, you can see gold was testing its lows, going all the way back to the low that was put in on the 23rd of September in 2011. So you were testing lows if you're waiting for a candle signal. Candle signal is always going to be a leading indicator out there. It's why you should learn candle signals. If you'd like to really learn all about it, there is a workshop that I did. You can access it. Just go to my name on the homepage of TFNN.com. Click on the Trader's Edge. It'll take it all the details there. It's an excellent gift to give to yourself. However, so here's a candle signal. Now, from a momentum, which was the bullish engulfing, where you actually made the low, what you did from a momentum standpoint was you had the 20-day cross back through the 50-day. That was in the middle of August. Now it looks like, so the bearish outlook here, that's not where you necessarily saw the first bearish sign. The first bearish sign was back out when you were making a triple top in gold out here, just like when we're taking a look at the euro out here, the triple top in gold coming in the October 4th level. Again, using a combined method of candlesticks, it certainly gave you a reversal signal out there. That was your 8 point of an A to B equals CD down in the gold marketplace. Now, if you get this crossover here, 20-day going through the 50-day, it's another horn out there saying, look, the dollar is going to go up. I mean, unless the euro busts through this area where it's at. It can, okay? Back is up against the wall. So I'm not saying that it can't, but most likely the probability of the euro busting through this area is pretty dim, especially having gotten all the way into that overbought condition out there and taking a look at the past on the charts out there. So a good probability that the euro is going to come down, that the dollar is going to move up. That will put price pressure in the commodities out there. And any pop that we see here this morning is just simply because of taking a look at the intraday 30-minute chart on the euro. You need to expect that because of where our markets are, and they really behaving logically out there. Of course, you can learn a lot from illogic as well. So any pop that we see in the market is to be expected because we're taking a look at on the 30-minute chart of the euro. I'll flip back over there for you as soon as I can find it here. So if we flip back over, because it also got into what? It got into oversold conditions. You have to expect it to pop. Well, if the futures opened up and you've got the euro, which is going to go ahead and get a little bit stronger here. That's going to do what? It's going to make our markets pop here. So I will tell you, bulls out there, be very careful, because this could be a huge bull trap out there. And if you want to take a look at other indicators out there, well, what is it that led the market down? It was the NDX 100. So now let's go take a look at the king dog in the NDX 100. What's that going to be? Apple. Apple gapping down this morning after holding a resistance area. That resistance area that I'm talking about, really the gap up from November 26th. That gap up on November 26th, the low there was 573.71. That was with 23 million shares, 22.5 million shares. That area was tested, that gap, that open window was tested on November 28th out there. The low that it got to was 572.26, closed at 582. Back inside that candle, what did it do it on? 18 million shares out there. Does it on 18 million shares. Then yesterday, 19 million shares closing back above that area, that gap holding. Well, that was until we woke up this morning. Now you've got Apple off 1150. Apple led the charge on the way down, folks. Apple made its high on the 21st of September out there. Apple is another key chart to be paying attention to. It gaps down. Apple's next stop is going to be the low of November 19th out there, where we see that gap. That low is 539.88, 29 million shares out there. Most likely what Apple will do is what? It'll go test the high volume low that's out there from November 16th with 45 million shares. So that's how you really put the markets together, how you stitch everything together. Let's go to our man Dave in Boston. Dave, thanks for calling. Thanks for holding. How are you this morning?
Good morning, Mr. Rhodes. How's everything?
It's just great. Absolutely great.
Weather there fine?
It could be better. Of course, I think the weather. I think the weather across the country's been pretty good, hasn't it?
Well, the heating season isn't off on a rocket, but we're still New England, so
yeah. Well, it's then you don't want to know how it is down here. Yes, you do. Do you ever come? Do you visit Florida at all?
Oh, of course.
Okay.
Of course.
Yeah, because it's it's like Boston's lower. I'm from Michigan, so I call Florida.
No doubt.
I call
Paradise,
Florida Michigan's
Steve,
lower
paradise.
Peninsula. Yeah.
Yeah. Definitely.
What's the island down by Venezuela? Aruba?
Aruba,
okay. So I went down in Aruba years ago. I didn't realize Aruba is full of folks from Boston. Did you know that?
Yeah, well.
You go to the bars there, and they're all watching the Boston Red Sox.
I'd love to follow Mr. O'Brien's footsteps. How does that sound?
Well, then you should be out buying real estate this morning. Or just simply have Tom do that for you, because I know that he's doing that.
Got it.
He's doing that this morning. I know he snagged a couple of nice properties yesterday as well, so he is hot and heavy. He is gold long America for sure. Putting people to work, that's a beautiful thing. That's what small businesses do. You wanted to take... Go ahead.
Big appreciation for both of you anyways. Yeah, I wanted to take a look at December calls for the SDS.
Okay, so if we take a look at the SDS, that is the, I think that is the two-time inverse ETF for the S&P 500. So let's go take a look at the S&P 500 first here, so that I can find my little chart here. I moved a couple things around this morning just to make it easier for me. So if we take a look at the S&P 500, what we can see here, because that's really in essence what you would be trading off of, either that or the ES Mini out there. So the S&P 500 moving back below the trend line, Dave. That's a trend line that goes all the way back to the October 4th level. The next touch point, that was the low on October 4th. The next touch point really being the low on June 4th out there. You can see that this level here is really held as a kind of a support resistance. The battle is going on there. Are you thinking of entering today?
Actually, I'm in it, Steve. I've got 61 strike price on it.
Okay.
Looking to see whether this makes sense to hold or close.
Yeah, so you've got this going into January?
No, December 22nd, I believe.
December 22nd. With the way that the markets are trading, where everything is at, I think that it is a good trade. The reason why I say that is because really the back is up against the wall in many different areas in the marketplace. So when you take a look at the real fuel in the fire out here is the U.S. dollar euro currency pair, because that represents like 56%, I think. The euro is 56% or 57% of the U.S. dollar index out there. So the euro certainly with its back up against the wall, as I covered in the open. So with the euro pulling back, the dollar getting stronger, that will put pressure on the markets out here. So that is a good part of the trade. When we take a look at strength in the market, that would be the DAX, and the DAX has its back up against the wall. So if the market is going to pull back, then now is the time where we're going to find out. That, when I say now, that doesn't mean at 9:43 on Wednesday. It means, you know, over the course of the next couple days out here and through the early part of next week. If, and I can tell you, is if the high from December 3rd gets taken out, which would be the 1423, let's call it 1424. You get it close above 1424, and what it does, Dave, it makes everything suspect. Meaning that the markets could easily move higher. Now, there's absolutely clues out here that the markets, candle-wise, the markets, you know, may really want to move higher out here. That's where even internally I have a battle, and where I'm going with that is there is a candle pattern that took place between November 14th, November 15th, November 16th, and November 20th out there, November 19th out there. That four-candle pattern formation out there is a very powerful reversal candle pattern. We last saw it at the June lows. June lows took the market all the way back up, you know, into the highs from September, so there was a heck of a move. That same candle pattern out there was a three-day candle pattern off of the November 25th lows in 2011, a year ago, and the market moved higher. It's the same candle pattern, Dave, that exists at the March lows out there. So it is a reason to be cautious, meaning you just simply, you play it as a trade. You don't back up the truck here. And what I am expecting is a possibility of nothing more than just simply a pullback, not where the market just falls apart, but just simply a pullback is one of the outcomes, with the market then moving higher. But everything is in place. This is kind of the long-winded answer, in my opinion, where it's really where you would want to put this trade on, and then you just let it work out. All right. So hopefully you didn't mortgage the house when you
did not.
That, because it's all about risk. It's all about high probability and managing your risk, and I'm glad to hear that you did that. And when you come down to Florida next, give us a call, stop by, give us a hug. We'll have to determine whether that's a bear hug or a bull hug, but we'll determine that at the time.
Well, sunshine down to you, Steve. I don't know how much of it you need, but thank you for the long-winded answer. That does me fine. And
good. Well, we all need sunshine. That's how we grow, right?
It works, don't it, huh?
Absolutely, absolutely. Have a great day.
Better than snowflakes.
What's that?
You as well.
Okay, take care.
Better than snowflakes.
That's right. Take care, my friend. As we go take a look at the markets here, folks, so we took a look at Apple. That's off $12 and change. That is like, I've had a little brain contusion there. But that, I'll tell you, that's a bullhorn. That's a bear horn. How about that? It's not a bullhorn. That's a bear horn out there with Apple moving down. Let's go take a look at Freeport-McMoRan here. Again, Freeport-McMoRan going ahead and says they're going to buy out Plains Exploration. So you got Plains Exploration. We'll take a look at that stock as well. PXP is the ticker symbol. They're up 24%. That's up a nice $9 and change. And Freeport-McMoRan down $5 and change. So let's go take a look at those two charts out here. I think I might have FCX as the ticker symbol for Freeport-McMoRan. Let's see if I already have that in my queue here. And if I do, I don't see it, so we'll go ahead and put it in there. There is a gap that has been tested, so we're going to go see if that window is still open on Freeport-McMoRan or if it is a gap down below that area. It looks like it may have gapped down below that area. Give me a moment here while we expand the charts and while I refresh this thing here. So Freeport-McMoRan right now trading out at $33.04 out there. Yeah, so it has blown through that gap. Let me erase a couple things off of the chart here. Let me delete that. Can I delete that? Delete. There we go. Okay, so let's first go take a look at the area that did hold as support out here, which was this this little gap. Actually, there was a close. I see a close down inside that on the 15th and the 16th out there. So let's go to the bottom of the gap, which is really the high of the session from September the 6th. So that's the area that did hold. Freeport-McMoRan had gapped up with 39 million shares as it came down there on the 16th of November, came down with 21 million shares. That was a area of support. That area of support now absolutely gone. You can see the volume in this. What Freeport-McMoRan did was came all the way back down to the bottom of its range out here, the bottom of the range being the July 25th level. 22 million shares down there, of course, today. You've got a big volume. You've got 42 million shares in only 18 minutes of trading. However, what you can also see here on Freeport-McMoRan, getting down, just using the relative strength indicator, getting down to areas where you're in extreme oversold territory. The last times that Freeport-McMoRan was down in that area, wasn't down with that type of volume necessarily, but was at the lows on October 4th, was in the lows here, let's see, right here, right around the 17th of May out there. Then the market just simply moved, Freeport-McMoRan simply moved sideways, and now you're down at that area here right now. If you are in that trade, I would just simply have a stop underneath. Now I would have a stop underneath the October 4th level. That would be at 28.85. Otherwise, I would go ahead and stay in the trade. That's if you are in Freeport-McMoRan, didn't have stops in place, just simply because of the way that Freeport-McMoRan has acted in the past when it got down into those oversold areas. Now let's go take a look at Plains Exploration, see what that is doing. PXP is the ticker symbol there. Up a nice 25% here. Would not chase Plains Exploration. However, this is getting up really towards its highs. They're going to be bought up by Freeport-McMoRan anyways. Mattress Firm, looks like feathers coming out of the mattress there, down 23% this morning. We'll go take a look at that when we come back. 877-927-6648. Be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. The Dow up 39 points right now. S&P flat, getting ready to go red. Composite down 12. Russell 2000 up 36 cents, getting ready to go red as well. They are making applesauce this morning in Cupertino. Apple down 17 bucks and change, off 3%. We're going to go take a look at Mattress Firm first, though. Now, Mattress Firm, folks, it's back to its IPO price. So for some reason, you were looking to get into a Mattress Firm, I suppose now would be the time to do it. Its IPO going back to last November here. Looks like the actual day was November 18th. So a year ago, this was trading out at the 21, 22 level. It's trading at 23.43 right now. It is up against one of my hammer candles, so we'll go take a look at that. Of course, Mattress Firm going from the 21 level all the way up into the 48 and change level. Let's see, it gets up to 48.18 on April the 17th out there. But you got Mattress Firm, Mattress Barn, you know, all these folks opening up stores. I don't know about you and in your area, but anytime I pass one of those mattress stores, I don't see a whole lot of people in there. They seem to be as many as mattress stores as there are CVS's and Walgreens and drugstores out there, and it just doesn't make sense to me. So, and it's clearly, when you take a look at the stock chart, that's about the sense that it's making, that it's back near its lows out here. It is coming up against, I don't really see the news in here that is driving this thing to the downside. However, you did have a hammer candle on July 17th, that low, 22.82. You get a close below that. If you're long, I guarantee you, you are wrong. You do not want to see that. That is the last time where you saw any bull. Well, that's not the last time you saw any bulls, but that is the bullish position. That is the line drawn in the sand. That is the July 17th level. Again, 22.82. You did see a sign of strength in this equity on October 4th out there. Maybe that was after earnings. It did gap up on some nice volume, 3.6 million shares. However, only been trading here for 26 minutes and 1.2 million shares to the downside. So Mattress Firm, you got the money coming out of the mattresses, no doubt today. Let's go back and take a look at Apple, off 16 bucks here right now. See what kind of volume is behind the Apple move. This is going to be one of the big heads up for sure. So far, in just 26 minutes of trading, 5 million shares. You've got a lot of applesauce being made in Cupertino this morning. That's going against 30 million shares for the entire day. That's the candle it is inside right now from November 19th out there. It's going to go seek the lows, 539.88. That, too, will be putting pressure in the markets out there. If we take a look at what else is moving to the upside and downside, you've got Fossil is up a little bit over 2.5%. FOSL is the ticker symbol there. Let's go see what is behind this move, see if there's any volume. So it's gapping up this morning, trading up off of its session low. So Fossil here, this is, okay, so if we take a look at Fossil, this is a nasty-looking stock chart. You talk about money coming out of the fossils here. I don't really know what that came from. Doesn't even make a whole lot of sense. However, we're going back to May 8th when he had 20 million shares as this gap down. The high of that has acted as a resistance level. That high, 93.60, just really traveling in a little bit of a sideways consolidation, detour, congestion area. It did have a gap up on August 7th. That's really somewhat the low of the current consolidation area. That is at about the 82.61 level here. Right now, all that Fossil is doing is going into the last time where it broke down, which was November 5th. Stay tuned, folks. Basil Chapman and Steve Rhodes doing the Money Masters this morning. Hopefully you're having a wonderful Wednesday. If you're off to start your day, be safe, drive safe, and I look forward to seeing you in the morning. Otherwise, see you in just a few. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.